Why pay more for your precious metals from the big guys with offices on Wall Street and who bank with JP Morgan? From the basics like eagles, maples, rounds, and bars, to collector coins like the Silver Shield and Heroes SD War Collection, to our exclusive line of insurance-approved, TL-rated precious metal safes, SD Bullion has what you're looking for at the lowest prices, period. Guaranteed. Find out why over 15,000 new customers have recently made the switch to buying their gold and silver from the dock. Give our team an opportunity to earn your business today at SD Bullion. Why pay more?
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Well, on a day that gold has been smashed back to half-decade lows near 1070, we invited our good friend and GATA chairman, Bill Murphy, to join us once again. Bill, it's been a while. Great to have you back on the show.
Great to be here, guys. Thanks for having me.
Well, let's get right into the market action. It's certainly been a rough year and a couple of years for gold and silver. Really the past, couple of weeks, gold and silver have been down day after day after day, setting some new records for consecutive days down. And really the charts don't look good and the sentiment's worse right now. I don't think I've seen such bad sentiment in the sector in really the last decade and a half. Probably have to go back to the late 90s since I've seen this type of sentiment, with gold trading back under 1100, back at the 5-year lows of 1070. And silver has actually been a little bit stronger, hasn't dipped below about 1420, 1425. So let's start with the trading action. What's your take on the markets and the outlook here right now, Bill?
Oh boy, the sentiment, it's worse. It's worse than it was at the bottom. You are correct, and I've never seen anything like this, and it's not getting any better, and it's devastated the entire industry because of what we call this gold cartel, and it's been a nightmare. And I hope there's a sign of a bottom here, but nobody knows. And look what they did today, as you said, it popped right back down again, and it's a very, very tough time. And in silver, for me, it's the worst acting market I've ever seen in 40 years in terms of being heavy.
Yeah, the silver markets in specific, yes.
Now, do I think it's eventually going to go bananas once they lose control of it? Absolutely. It's going to be historic, in my opinion, but you got to get from here to there.
One of the things that is interesting is, we're always on the lookout for some kind of sign that the cartel would do a managed retreat. And when we were recording last week on Thursday, by that time, we had begun the downturn on October 15th, and we had 2 days where we had very small up days in gold, but they basically were neutral days. We had 17 straight days all the way through last Friday of downside action in gold. And when we were looking at that on Thursday, it was pretty clear that, that's a duration and an extent, an aggressive period of cartel capping and pushing prices down that gets long in the tooth. And we saw that reversal on Monday as expected and as I talked about. But the reversal, and this is what I consider to be interesting market signal intelligence value, was so trivial, so tiny. And now we're sliding back down again. And, they're definitely targeting that, August, around August 26th or something like that when we hit the low in silver, and so should low in gold and whatnot. And what do it looks like the whole management of perceptions in the sentiment game that the cartel has been running is still up in force, and that there's no sign of a managed retreat anywhere in any time soon. You think that that's a correct assessment as to what's going on?
Yeah, and I don't think there's going to be any more. I think there's going to be a nightmare, and then it's going to blow up, and the move will be historic, as mentioned. And I've never seen anything like this. And it started many weeks ago when the gold open interest started to go way up. And of course, silver's been up all year at high levels, and then the gold open interest went bananas over 470,000, and then they just set up the market for into that Fed speak, and we had an outside day reversal to the upside, and it couldn't have looked better, and then they just killed it. It was the same day the Dow went up 200. So what was good for the goose wasn't good for the gander, and the dichotomy was quite noticeable, and it's been down ever since, as you said. Terrible.
Right.
And what's interesting, if we step back a little more of a long-term perspective in view, in gold especially, it certainly looks like if they're successful in pushing gold down below 1070, there's certainly, as Eric just alluded to, there's a very large amount of stops sitting just below 1070 that would be triggered. And, I mean, it certainly seems likely, if not inevitable to me, that if and when that happens, gold's going to completely retrace its entire move from 1,000 up to 1915 and back, and retest that 1,000 level. And if for those who've been in the market long enough, remember, gold took, I believe, if my memory serves correctly, I believe it was 3 taps and out. It was the fourth time before it that it tested 1,000 before it actually cleared that level. And that, to me, that will likely serve as the bottom, just as there's such strong support at that level.
Well, Goldman Sachs, is going to be right, huh?
We'll see. Again, that's if they're successful in pushing gold below 1070. That's just speculation on my part. But it'd be interesting, just if you think about it, they'd be successful in retracing that entire move from gold's breakout of 1,000 all the way up to 1915.
Oh boy.
Yeah, and the 1,000 round number phenomenon as support is not only just for that sake alone, but the fact that we can look at the market and see how premiums in silver in particular, but gold as well too, exploded higher when they got silver under 14 and when they pushed gold under 1,100 on the last trip down. And on a net basis, when it comes to the physical world of real gold and silver, we actually have seen what we would have expected to see. The physical market asserting itself and putting a limit on the degree to which the cartel can push prices down. So they took a break. Halfway through October, prices moved up a lot, and halfway in the second half of October, all the way to today, as we speak and record after the market close, we just it's been a slide down the razor blade to lower and lower prices. But we still have the physical market slowing them down every once in a while, and I suspect, and it really isn't a forecast. It's more of an educated guess as a market participant looking at this for many years. That 1,000 is going to create way too much stress to the physical market, and that will in fact serve as an ultimate bottom. And people always give analysts grief when we address these questions because we're trying to wrap our understanding of what this weird creature that we're touching is, and in the great analogy of trying to explain what an elephant is by touching its tail or whatnot, that's essentially what we are trying to do. We don't have perfect information, and that's not the role of a professional forecaster, and it comes with the territory of making mistakes and whatnot, but the exercise of actually trying to understand what is going on that forecasting forces one to go through is it's important all in and of itself in terms of trying to understand where the market is. I mean, in the big picture, I still think that the physical demand for silver and gold continues to grow, and that's going to serve as a backstop. But whether or not people can actually purchase $9 silver, if we're able to go that amazingly low, or $800 gold, or whatever, if the hairy dents of the world are correct, I think is a fantasy, because the prices based because of premiums will never get there. And at some point, this reversal's got to come. So maybe it's a capitulation that causes the final catalyst, and kind of like 2013 when we had 400 metric tons worth of gold sold between the Friday and Monday in that April month, right before tax day, crashing gold down $200 plus within a matter of a week. It elicited a gigantic physical demand in Asia. And maybe that's what will ultimately have to happen here for us to have a final bottom in the markets.
Well, the way I see it, and it's just that's an opinion, but I think the gold cartel is going to go all out until they blow up, and then it will be really something to behold on the upside. But they've changed their plan from a managed retreat, which they did for 12 years in a row, to all-out attack and annihilation, and it's really been something. And there's no sign of it abating. And that's why I think at some point here, as you're talking about, the physical market's going to seize up on them, and then the prices are going to take off, and they will be forced to cover, and it'll probably be very fast. And this could be the final effort on their part. We just don't know. And so far, anyone who's tried to predict it been wrong. Throw me in there if you want to, but we thought summer would be dead and this fall would be fabulous, and it started off to be right on the money, and then everything fell apart.
And that's a pattern actually that manifested to some extent last year too, because we from July on we started sliding down, and it was really only until about mid-October that we turned around. And the seasonality pushed us higher, but then again the gold cartel came back for a second act, smack in the middle of the strong seasonal period for precious metals.
Yeah, it's the way it is.
We were just chatting a little bit before the show, Bill. There's been some chatter about GATA giving up in the fight, but that's not the case, is it?
No, of course not. And thanks for bringing it up. We want to win. We're not, as Chris just said today, and sent out something. We're not going anywhere. We're just trying to find ways to go forward, and it's just very frustrating because it seems like the more we get proved right here, the least people want to hear about it, whether it's cognitive dissonance or something like that. And it's funny because at the Jefferson conference, I actually made my second best call ever. I said the situation is hopeless for the time being, and sure enough, gold then dropped $100. But it wasn't saying there that we're quitting. We're just trying to get more people to deal with the issue of the market being manipulated and how obvious it is. And it's frustrating because the press won't talk about it. The industry won't help itself. It's a nightmare. Now, I would think after 17 years, and to get something like this, it'd be an outrage. There's nothing. There's not a peep.
For the benefit of our listeners, the conference that Bill was speaking about originally was the Blanchard Conference, and it was the first main investment conference in the precious metals community, and now it's called the Jefferson Conference. It was last month, and one of the biggest, if not the biggest, precious metals-focused conference in North America. And I'm kind of curious, what do you think were the most interesting takeaways in interacting with CEOs in the industry and so forth?
The most noticeable thing is a lot less people and a lot less sponsors there with booze and stuff like that. And Brian does a great job running a conference, and I have very high regard for him. And it's just very difficult to make things happen. It's that way, as I mentioned, in the entire industry.
So you think that as an indicator of sentiment, and in particular possible investments coming into supporting the industry for mining CEOs, et cetera, and exploration, that it is probably as dead as you've ever seen?
Yeah, it's survival mode
Mm.
for many of them. Some of the bigger companies that are selling gold and other currencies are not doing too badly. But as far as I know, the silver industry is a mess. The cost of production is much higher than it is for most people. It's really tough. But you guys know more about that than I do, so what's your thoughts?
Well, the silver lining, to pardon the pun, is that this is supply destruction on a going forward basis, and even in the base metal space, with silver being largely 70% produced as byproduct from the copper mines, et cetera. The carnage that's going on there, the position of Glencore, where they're a giant producer of copper and zinc, and they're shutting of their assets and selling of their assets and whatnot. It's estimated that they'll probably reduce on the order of maybe 30% or so of their production of zinc next year, and that's going to directly impact silver. There's an end game to this that's clear. We can see, why keep going back to the analogy of the elephant. I can kind of figure out that we got an elephant in front of us. It's just, we have no idea when ultimately things will, in fact, assert themselves from the physical market point of view and put an end to this nonsense. Or maybe I should say, better stated, not an outright end, but at least, maybe just a spike up and then a return to managed retreat that we saw earlier in the last decade, that kind of thing. Who knows? There's that scenario, or the cartel
I think they're going to blow up. I could be dead wrong.
Yeah.
That's what I think is going to happen. It's not going to be.
Yeah.
It's just going to be over, and it'll be dramatic.
Yeah, I mean, and that can even fit in the context of a worldwide currency reset. Basically, they're playing a game. They're putting on a show and trying to pretend and extend and pretend and put forth the idea that the financial markets are fine. And this is obviously a statement that applies to the entire swath of Western financial markets because of the manipulation that's just everywhere. And who knows? I remember back in the day when you had the Mexican tequila crisis and crisis with Brazil, and when Robin Rubin was at the helm in the Treasury Department, he openly spoke about basically his plan after these crises was simply to just try to stall for time in the hopes that the markets would come to some form of stability and that the system would survive. I mean, we have had multiple giant bear markets that would have forced the Federal Reserve and other central bankers to reflate the system, and now we have such an unstable system that I don't think that whole Rubin thesis is even possible. And it's clear that that's what the Fed is operating under. They're just trying to keep things afloat long enough and hope that things will fix themselves. And that's just like about the most asinine economic strategy you can possibly have, but that's where I think everybody is.
Well, I remember like it was yesterday that Robert Rubin's approach to kick the can for 6 months was his usual thing.
Yeah.
It's interesting to me, as we chatted before the show, Bill, that even some in our own industry now don't want GATA in. Well, it was the Silver Summit you said has uninvited you to this year's meetings?
Oh no, I'm going. I just had a question, and I don't want to be. I feel like a crybaby because the girl running it's terrific, but it was just that got back to me and said, I'm doing a workshop at some point with Ed Steer, and she had me checked off to go where the keynote speakers were, and I just got back to her very nicely. I said, will I be here since my title is doing a workshop, kind of thing. Oh, of course you can. He just went silent about, no, you're just speaking. You're just presenting at his workshop. That's it. And it was after going there, 3 conferences a year many times for 17 years. It's like, gotta be kidding me. And, but I want to do the best I can up there. And we're trying to support the conference, and I wish them all well. Just,
well, I'll hopefully get myself down there as well, too. So I'll finally be able to meet you in person, which will be great.
Well, that would be fun. Let's do that. Now, excuse me, what I'm curious about, because we've had a lot of bullish things that people keep bringing up, and nothing seems to matter. It's had no effect on lifting the price at all.
But when you look at things like the registered gold available in the COMEX and the fact that it went over 300, you can see the stress in the system. As the fundamentals continue to pile on in a positive direction, we see these counter indicators of what's going on with the stress in the system that the cartel is so far been able to manage. It's very frustrating because the fundamentals are pointing in a direction that should have already seen gold reverse itself, and that also is all the more true given how the physical market is really, really tight. The whole thesis about a big crash is partially ameliorated by the fact that in order for them to be able to do what they did in 2013, as but one example, they have to have the gold. And they've already rated over half of the ETF available gold. They've already probably done quite a bit of leasing. They've already gone after other gold from other sources that have been available from, say, geopolitical means, liberating Gaddafi's gold and going after Venezuela's gold and pulling 35 or 37 metric tons out of Ukraine. Memory fails. I don't remember the exact number, but these are one-offs. They're one-time events, and at some point, the physical market really does have to assert itself. It's just a question of when.
I think the thing you have to step back and realize that the fundamentals can't tell you when they can't tell you the when everything's going to change. But I mean, if you step back at the big picture, I mean, just look at silver production in the U.S. and Canada, and silver coin sales of one coin in each of those countries, the silver eagle and the silver maple. I mean, we're running total mine supply of silver just under 50 million ounces in U.S. and so that's total mine supply versus silver eagles are probably going to be 45 million coins this year, and the maples will probably be between 30 and 40. So I mean, you're going to have a deficit of 25 to 30 million ounces, and that's just two coins. We're not talking about all of the privately minted bars and rounds, all the other mint offerings. I mean, it's maybe, from the numbers we see at SD Bullion, I mean, the Silver Eagle sales might compose a third to a half of overall sales. So you can double those numbers, and that's just on the investment side. So any other industrial demand is not being accounted for. So, I mean, obviously in the long term, that's not sustainable. You can't have one...
It's not even sustainable in the short term. That's why we got premiums over $20 not too long ago.
Right.
You know, when you add spot plus the premium.
I mean, think about that in perspective. The United States has to import silver. Their domestic mine supply can't even sustain production of the 1 ounce bullion Silver Eagle coin. And it has.
And this is what I'm talking about none of these things ever seem to matter.
Well, that's what I said, Bill. You have to step back and realize that the fundamentals can't predict the when it's going to matter. They matter. It's just that it's someday, some point in time, the scale's going to tip, and when that happens, like you said, it'll be historic and explosive. But the fundamentals can't tell us when that's going to happen. At least that's how I view it.
Agree.
So, John, what do you see in the retail trend? Anything interesting going on as far as SD Bullion sales or stuff you've been learning from distributors? Anything new?
Yeah, gold sales have been really strong this week, especially as gold neared 1070 again. I mean, overall the market is strong. Sales are strong, but it's a level down from what we saw in August, September. I would say it's strong, continued demand, but it's not frenzied. The frenzied type of demand we saw in August, September, where people were searching everywhere for any ounce of physical silver available. The market is still somewhat tight, especially in certain products, but there is supply available on the wholesale side again. There is some 90% to be found. Silver Eagle premiums are similar to what they've been over the last couple of years, well off the spike that we saw in the July through September timeframe. So it's, as an investor, right now is a much better time to purchase physical silver than 2 or 3 months ago because the premiums have come way off. So I'm not sure whether it's that everything from what was throughout the whole media with the whole blood moons and everything, that everyone believed that the world was going to end in September, and then that didn't happen, that there's not quite the impetus to buy right now, or if it's a combination of we've already seen these levels in silver. Silver's already traded in the low 14s. That we're not seeing quite the level of physical demand that we did July through September. But I mean, that being said, from a historical level, it's still massive demand if you look from a historical perspective.
Yeah. And what's interesting too, you know, we affectionately call the core buyers of physical in the United States and Canada is the stacker community. And, you know, they're already mostly all in. They've been in, and they're the strong hands. And then we get these burst periods of time where the paper traders come and start accumulating gold and silver ETF shares, and they dork around on the comics, and that puts pressure on the cartel, and it very often is associated with periods where the cartel will back off. That's what we saw early in October, and we spoke about that in the previous show. It's what happened, you know, in the end of December, going into the January 24th peak earlier this year. And you know, the phenomenon of those exploding premiums was kind of like a short-term last gasp kind of thing of the buyers of the stacker community coming in and buying. And now that they are taking a back seat to some extent, I guess in part because of the shift of, you know, the Shemitah fear not, you know, coming and manifesting in a time frame that these buyers were expecting, that they're kind of just sitting on the sidelines right now. And then you add on top of that the management that the cartel does when it comes to targeting the paper traders. That's in essence what we have seen since October 15th, is that slide down of beating the heck out of these paper traders that are the primary, or at least in terms of what the cartel is afraid of when it comes to the forces that they must confront in order to preserve the image of pricing mechanism out of comics suggesting they were in a perpetual bear market to kill sentiment. That's the game they're running.
I will say, however,
so far
that the wholesale market has not been able to build any inventory. The wholesale market, for the most, and I mean, there are still a couple of the largest U.S. Wholesalers still are not caught up, but most of the wholesale market has now been able to catch up on orders from September, but that doesn't mean they've been able to build any inventory. So yeah, maybe premiums have come down because the somewhat reduced demand, they're being able to meet that, but there's not been any significant inventory build. So if and when gold does break through 1070, if and when silver does break below 14 towards with a 13 handle, you're going to be right back where we were in September, because there's not any inventory that's been built in the retail investment space or the wholesale market.
Yeah, that's a really important fact for people to keep in the back of their minds, because it also is analogous to the ETFs being halved and the source, various other places in which gold is being pulled to meet Asian demand. And there's not enough to be able to do this indefinitely.
And I mean, we talked to Tom Power from Sunshine Mint, and things changed overnight for the U.S. Mint. What was it? What did he say? The June-July period after the whole Greece crisis, and the U.S. Mint had built inventory for months, and they had built it to a level that they thought was enough to meet any serious demand spike, and they were wiped out in 24 hours. So I mean, and the U.S. Mint's not caught up. They're still allocating product. They've all of the authorized purchasers of the U.S. Eagles are still taking every single coin that the U.S. Mint will let them purchase. So there's been no inventory buildup whatsoever. So if we do break to new lows, you can see how well premiums have come down right now. It's the shortage. It wouldn't take much to have the shortage rear its ugly head again very quickly.
I guess one of the catalysts we'll just have to keep an eye on is this whole interest rate job-owning song and dance that the Fed is trying to execute.
Is that boring or what?
Yeah, tell me about it. Well, I mean, at least the script is so dang predictable that you know what they're going to do. I mean, the odds of them raising rates in December right before the Christmas holiday season and then risk the possibility of setting off financial market turmoil where, the majority of retail sales take place in any given year. I mean, it's just really unlikely that the Fed is going to raise interest rates in December. Then 2016 is an election year contest, and that is going to put pretty significant pressure on the so-called independent Fed. What a bag of hooey that is. So the Goldman Sachses of the world and other mouthpieces that are at the wheel trying to steward this whole sentiment effort of keeping the lid on the precious metals are using the idea of rising interest rates as being the biggest threat to gold, and that whole thesis has been with us all year. And when we get through 2016 and the Fed never raises interest rates at some point, that's probably going to be the catalyst that can assert itself amongst other catalysts. Who knows? Time will tell. But I still believe that 2016 is going to see enormous volatility in the standard financial space, both bonds and general equities. And we've lived in a world where the bond market vigilantes are an endangered species. And at some point, those guys have got to come back. And who knows? I mean, maybe central bankers of the world can continue to manage the markets and keep a lid on interest rates. But the laws of economics haven't been repealed. They're just in hibernation.
Well, I agree it's going to be volatile. I'm pretty sure that we'll see, but
yeah, and
I think we're headed in that direction. One thing I'd like to bring up real quick, just to touch on it, we didn't assess their ability, using some of the things you've mentioned, to rig these markets. And with all the changes in the financial world and derivatives and all this kind of thing, they just found ways to get the job done, and we didn't anticipate that years ago.
Yeah, and the explosion of the derivatives
yes.
is just phenomenal. When we look back at the data, again, we can understand what this elephant creature is. I mean, the explosion in the Citibank position of their derivatives book in precious metals was mind-blowing. And it's very clear, they started in the fourth quarter of last year and picked up the baton as principal actor in the gold cartel's effort to manage the price of gold. I mean, it's there. You can see this data, even though the vast majority of the conventional financial world won't give GATA the time of day. We can see the really unusual action that was going on with the reverse repos earlier this year that Dave Kranzler put out as a missive and bird dog. There is, without any shadow of a doubt, concrete evidence that behind the scenes, the financial markets are very rickety and going through issues of insolvency and firms like Deutsche Bank that are juggling their derivatives books and gasping for air, and that's not a condition that is going to be able to let the Fed raise rates, and it's not a condition that is going to let the markets go on indefinitely without some kind of a catalyst hurting these companies and setting off chain reaction in the derivative space. I mean, that's really the existing background condition that we can say exists without any shadow of a doubt, even though the vast majority of the propaganda messages that we get from the financial mainstream would like for people to believe otherwise. And that ultimately boils down to the importance of having precious metals for insurance sake. And we can't forecast the future perfectly, but we can say that there's a role for precious metals as insurance that's going to assert itself at some point and save the financial health of a lot of people in their portfolios.
And the time to hold the insurance is when you need it, not to dump it right before the floodwaters hit or right before the hurricane hits.
Well, this is where GATA comes in. We're trying to keep people in the game, and again, some people get the wrong idea about where we stand, and we stand to do exactly what you're talking about. It's going to be a big deal down the road. And if I'm correct, when this blows up, if that's correct, it's going to lead to the biggest financial scandal in U.S. history, in my opinion, because of all the other things that it's going to lead to or be about. It won't be just because gold goes up, or silver. It won't matter as much as what they've done to make this happen and how it's going to affect all the other markets.
Yeah, all the time we get new listeners, and people are coming to the precious metal space for the first time. You want to talk a little bit about Gibson's paradox and give people a sense as to gold as smoke alarm, Alan Greenspan, all of that stuff.
Yeah, it has to do with interest rates, and basically that's the reason they're rigging the gold price, because historic relationship between gold and interest rates. And on the same note, look at what the interest rate picture in the U.S. has done for gold and silver. Nothing. And we still are raising rates. Well, taking it to near zero, it didn't do a thing when it should have. And I guess that's where GATA would come from, because of this malign force that took the price down and has kept it down, and using various means, because they're petrified if it takes off what it could do to interest rates.
A couple of weeks back, Frank Holmes had published a really interesting piece where he looked at the peak in the gold market in 2011 and the corresponding shift in QE2 at the time, and how we basically have seen, if you take at face value the government statistics on inflation, which obviously are cooked, but suffice it to say the vast majority of the conventional financial world still buys into that thesis and uses that data as part of their decision-making process. And the take-home point that he put out to the gold community was that we've seen roughly about a 500 basis point increase in real interest rates because of the shift in the absence of buying from QE. and that gold, per his understanding of that, was actually performing reasonably well considering that headwind. And if we are in fact going to be in a scenario where interest rates are not going to be able to be raised, that in and of itself is going to probably serve as a catalyst for a shift in gold price. So I mean, it's interesting that we can identify things on a fundamental basis where the behavior in gold kind of sort of makes sense, and that it's understandable why the conventional financial world hates the stuffing out of gold. But at the same time, we can also see what's going to change such that this whole management effort of sentiment will no longer be able to continue on.
A rising gold price is bad for business. It's bad for the politicians, bad for the bankers. Every time the gold rallies sharply is about some negative reason. As you're talking about, that's the reason it's hated so much by the establishment.
Well, Bill, we appreciate all the work you've done over all the years, and on behalf of the listeners, keep up the good work. Don't quit.
Oh, no, we're not going anywhere, John and Eric, and thanks for having me. I really enjoyed it, and as I said to my people, followers at the Metropole Cafe, God is fighting the good fight.
Sure are, so keep up the good work. It's always a pleasure to have you on the show, Bill.
Thanks. Yeah, and Eric, you said you might be in San Francisco?
Yep. If health-wise I'm able to get down there, I'll be down there. I should probably tell
please
folks
let me know if you're going to be there, and like to say hello, and I'll be staying at the hotel.
All right, all your listeners can go make their way to the Silver Summit and meet Eric and Bill.
Sounds good.
All right, for Bill Murphy, Eric, and the Doc, thanks for tuning in to this week's SD Weekly Metals and Markets.